If you look at a country like Germany, which is a population of 82 million, they're already well into the 20s and headed to the 30 percentile in terms of EV penetration rate, and Norway's at 90.
Tesla absolutely has to make its cars more affordable if it wants to become an industry-leading car company.
Feels like the market is in a space which benefits hybrids. Toyota, GM starting to lean in that direction. Think about it. Ford's already there. Tesla just doesn't feel like it's in the sweet spot.
All that and more. So let's get to it. Tesla stock finished at the closing bell on Friday, up a little over 0.5%. They continue that momentum into the after hours, a little bit up, currently sitting at $164.01 per share. For the week, down over 11%. For the month, down almost 17.5%. Year to date, Tesla down almost 34.5%. It's getting rough out here as Tesla's market cap is growing smaller and smaller, inching toward that $500 billion market cap. Now in a decade's time, I believe Tesla will be a multi-trillion-dollar company. Every and anything would have to go wrong to derail Tesla off of this path. Something tells me by the end of March, your boy will be placing another long call. One that probably expires in 2026. Let's see how low Tesla stock can go.
You're watching this potential coming slowdown in EV demand. What would that mean for your business?
Well, we remain very bullish. If we look at the report, overall, 1 in 5 vehicles sold in the world were EVs. And across the globe, all the numbers were up. And if we even look at what happened in February, we finished, fiscal year 23 or calendar year 23 at 8%. We came in well over 9% in February already. So the space continues to grow. There might be some retraction from some auto OEMs on it, but on an aggregate level, it continues to grow. Now, particularly for Blink, we're just not a US-based company. We have 20 to 30% of our revenue comes from Europe. And if you look at a country like Germany, which is a population of 82 million, they're already well into the 20s and headed to the 30 percentile in terms of EV penetration rate, and Norway's at 90. So the trend is moving from China to Europe to the United States. You might see some ebb and flows and some contractions, but overall, according to McKinsey, we're expected to see in our industry alone that there's going to be a need for 28 million chargers by 2030. And the majority of those are going to be level 2 chargers. So we continue to see growth. There might be some small retraction, but overall, it's a good bet that EVs are here to stay.
You're damn right. I mean, I can't help but think about the massive opportunity. Look at China. Look at Europe. Hell, look at Norway. Norway's at 80% penetration. God damn. I'd say the trend path is pretty clear. What we do need, though, is more charging. Like the CEO of Blink Charging said, the demand for charging here in the US is going to be massive. It's a Herculean task for any one company to try to do. And while Tesla's doing it the best, we're going to need everybody's help. Blink Charging, EV Go, Electrify America, whatever. Everybody needs to be making chargers, and they need to be making them tip top. Don't worry, I think Tesla's holding master classes on the subject matter. I think.
Tesla also had a difficult week after Wells Fargo downgraded the stock to underweight from equal rate and cut the price target to $125 from $200 a share. The analyst also called it a growth company with no growth. UBS also cut its price target on Tesla to $165 from $225 while maintaining its neutral rating.
A growth company with no growth. Oh, I can't wait for those individuals to eat crow on that. Tesla's growth opportunities are too numerous to count. And that's just the that we know of. Tesla's product roadmap, the maker knows where that's going to be headed. But I do know one thing for certain. I'm gonna want whatever Tesla has to offer.
Why don't we start with Tesla? What's going on there?
The company entered the year with a very rich valuation multiple. And it's in a period where it may not grow much. Last year, earnings were down. This year, earnings will very likely be down. And the automobile business this year may not even grow. And unfortunately, 2025 is likely to be the same. So you have a stock that's trading at, depending on where you think numbers are this year, somewhere around 60 times earnings, and there's no growth. And you were talking about how there have been shifts in the Magnificent Seven. I think, part of the challenge for Tesla and to a certain degree for Apple, and why you're seeing investors vote with their feet, is neither are growing this year. And it's tough paying up for companies that aren't growing. So there's clearly, concern for Tesla in the near to medium term about its ability to grow.
If you're concerned about Tesla's growth, please continue to sell your shares. I'm just one man, but I'm soaking them up as fast as I possibly can. And believe me, once I get them, they're not going back on the market. Not until 2040, maybe. Maybe. We'll see what it looks like. In short, it would take something catastrophic for me to let go of these shares that I'm acquiring right now. In my humble, uneducated opinion, these are bargain bin prices for TSLA. And your boy has never been one to pass up a discount of this nature.
They seem to have put a lot of emphasis on lower priced automobiles, including a new model that I think is coming out next year, the Model 2, if I have it correctly.
You do not. I am 100% positive this thing will not be called the Model 2. Does anybody know the history of the Model 3? They did not want to call this thing the Model 3. Ford, being quite stingy with the letter E, forced Tesla to go numerical in order to create the most expensive joke on the planet. I highly doubt Elon Musk is going to dive headfirst into something he never intended to do. The Model 3 is an aberration, a necessary evil to get him to chuckle every time he talks about Tesla's sexy lineup. There is no Model 2, people. There just isn't. It will not be called the Model 2.
Do you think going down in price is a long-term win for this company or not?
Tesla absolutely has to make its cars more affordable if it wants to become an industry-leading car company. Right now, Tesla's models are largely at $40,000 and above, and that's a relatively narrow market. So Tesla's aspirations and its valuation suggests that it's going to be a dominant car company, potentially as big as, Toyota or Volkswagen, who are the biggest car companies in the world today.
Bigger than Toyota and Volkswagen combined. I like the sound of that.
But in order to do that, you have to appeal to a broader set of consumers rather than, relatively affluent consumers. So it absolutely has to go down market. And the challenge is it's going to take some time. The car will likely only debut at the end of 25. It'll take some time to ramp that car. So Tesla may not see real volume benefit from that car till late 26 or even 2027, and that's a long time for investors to wait.
Is that why BYD, though, is outpacing Tesla right now, that they have more models to choose from for lots of different consumers?
Absolutely. I mean, Tesla really has 4 models, and 2 of them are above $70,000. BYD has almost 30 models, and they start in China with micro EVs at under $10,000. So they're certainly able to, and they largely play in the Chinese market, offer a full suite of products from low end to more expensive ones. They just introduced a luxury car that's over $150,000. So they are providing enough choice to offer the entire marketplace, which Tesla is not. It's really playing in the luxury niche market at this point.
Can't argue with that. Tesla definitely needs to open up their total addressable market. They're constantly dropping prices on their current offerings. Except, I believe Tesla is going to raise their prices on the Model Y at the end of the month. So if you don't want to spend an extra stack on your new Model Y, you might want to get that thing right meow. Right meow.
Wells Fargo came on the program yesterday. This is what they had to say. No growth this year, negative volume growth next year. How do you value a company if they're going to be the growth figures over the next 2 years?
Yeah, look, I disagree with next year in terms of the negative volume. I mean, like, my view on Tesla is it's easy right now to get negative. Look, they are going, I mean, we talk about it day after earnings here, they're going through a white knuckle period. I mean, China demand's been soft, the margin story, the communication. But look, my view is on the other side of this will be a company on its way 2.5, 3 million units when we look at the next few years. They will gain more share, the leverage will be there, and I believe ultimately numbers, EPS growth will start to come back up.
You can't be short-sighted when looking at Tesla. Who knows when this stock is going to pop? Your best bet, given that the stock market has a massive amount of uncertainty toward TSLA, is to just buy and hold that stock for as long as you possibly can. That's the best bet. There is no telling when the stock is going to pop or when it's going to have some valley type periods due to more uncertainty, fear, and doubt surrounding the company and its stock price. Right now, the stock is down 30%. 30%. It has a 52-week high of damn near $300 per share. And I'm gonna tell you like this, not much has really changed with the company. Everything's been happening according to plan. There will be some stymied growth for 2024, and it might extend a little bit into 2025. But don't forget, Tesla has not revised its plan to create 20 million vehicles by 2030. And even if that gets pushed back a year or two, which is in my bear case, this is still going to be the most valuable company in a decade's time.
It just doesn't feel like that's where the market is right now. It feels like the market is in a space which benefits hybrids. Toyota, GM starting to lean in that direction. Think about it. Ford's already there. Tesla just doesn't feel like it's in the sweet spot. What's going to change your mind on this?
Well, I think the issue is, do you want an EV or do you want a Tesla or do you want a hybrid? And I think for Tesla, look, a lot of it comes down to price. And obviously they've cut price. That's what they need to do in terms strategically. The problem now, and speaking to Wells and some others, is that numbers are coming down. It's going to be a sluggish 1Q. So in the near term, it is easy to be negative on this. I mean, our view is, look, we've been here before. The last decade, many times we've been in these white knuckle periods. To me, this is not the end of the growth story. I believe this is a growth story with AI, FSD, that's still going to have a significant piece on the horizon. But no doubt, in the near term, like when I have a positive note on Tesla, probably 30 emails within 10 minutes negative, because sentiment, I mean, look, the Uber driver today was super negative on Tesla.
Yeah, but Dan, you know why they're upset. Because if I'm a client, this stock is down by something like 30% year to date, and you've had a buy on it the whole way down.
No doubt. But
that's why they're upset.
100%. But in my career, in 25 years, our calls have been when things got the worst, whether it was Apple, Tesla, Amazon, Apple. When things got the worst, you handheld through those periods in terms of onto the other side. It is easy to yell fire in a crowded theater when you're going through this.
Down 30% and you've been telling me to buy? You're damn right I have been. When the stock valleys, that's when you should be dumping more capital back into your position. If you believed the story at all-time highs, what's making you think something different at all-time lows? Did the men in black come and flashy thing every executive from Tesla to make them forget how to produce and manufacture these cars with the utmost efficiency? Even if Tesla had to start over from today, they would still be the most valuable company in a decade's time. That's how fast they are outpacing and lapping everybody in the automobile industry. Nothing has changed but the stock price. In conclusion, Blink CEO says EVs are here to stay. Trust that. And I'm inclined to agree with the motherfucker. Regardless of what you hear in the financial news media about a slowdown in EVs, all you have to do is look around the world. China, Europe, Norway. Here in the United States, you can look toward the coastlines. As California goes, so does the rest of the United States. It'd be a heck of a lot easier if our legacy auto manufacturers and some of these EV startups not named Tesla were actually producing at a high rate, but doesn't have to sacrifice on performance, functionality, and style. Some of these look terrible, but they'll get there or they'll go extinct. One of the two will happen. Tesla had a week, and it's probably going to get even worse as they head into Q1 with some disappointing news for some individuals. Tony Sacconaghi, a notorious bear when it comes to Tesla, I mean, forgive him, he thinks Tesla is just an automobile company, and although he can kinda see some of the tech, he believes that'll be a footnote until Tesla can grow to the size of Volkswagen or even Toyota. Spoiler, in a decade's time, Tesla will be larger than both Volkswagen and Toyota combined. Tony believes that Tesla should have a fair value estimate somewhere below that of Toyota and Volkswagen. And if Tesla was just an automotive company without this manufacturing technological moat surrounding them, then I might tend to agree. And according to Dan Ives, Tesla is going through one of those mini white knuckle periods, and that if you're able to hold on, you might be able to reap some of the benefits that Tesla is going to have in the future. That's all I got for you today. Be easy. Brrr.